All right, I think this is our whole um, New York crew here. I mean, not New York, sorry, PST crew here. Like everybody from the last webinar. How's everybody doing? Doing well, awesome. Good night for me too. Good up here in Canada. Great, great. You guys ready to learn? Cool. Let me see, how many people do we have in here? We have 12 people. All right, webinar is being recorded. Can you guys see my screen? Okay. And you see it just says Cascade, right? I just want to make sure you're on the right screen. Cool, cool. All right, so today we're gonna go over the daily cycle and the intraday cycle. I'm gonna be showing you guys New York, and then Ivan is gonna be doing the London. He's a better London trader than I am, so he'll be showing you London and Asian, and I'll be doing a little bit of Asian because it has confluence with New York as well. And you guys have the indicators that I told you about in the group chat installed, right? If you do, please tell me. If you don't, please tell me. That way you can get all situated. Cool. Right on. But I don't have volume yet. Should I put it on? Yeah, go ahead. Put the volume on because that's important. Use a 20 MA. I use a 20 MA just so I can judge my volume. What's high volume? What's low volume? No worries, Theo. Yeah, you can do it anytime. We're going to give you guys a day to go over the material and practice and study. That way you guys can absorb some of the information. Okay. So what we call our cycles is we call it a cascade, and I'll explain why when we get further in the lesson. There's 8 types of cascades, and there are 2 days that you shouldn't trade, okay? And the days you shouldn't trade, they're called trend days and low range days, okay? So the first cascade that we're gonna go over is called, the way I'm gonna present this is I'm gonna go over this slideshow. After the slideshow, this will be sent to everybody. I need to watermark everything, so give me some time on that to send it to you overnight. So you guys will have this exact study guide anyways. Okay, so the reason you don't have it right now is because I haven't sent it, but you will have all this. Okay, so let's go over the first cascade. It's called the bullish cascade. Like I said, there's 4 types. Okay, and let's look at type 1. Okay, so this is a bullish cascade. All right, so we have our Asian range here. So during the Asian range, we're always going to create a higher low of the day, right? So high, low of the Asian range. And we have to remember that during the Asian range, this is somebody's in another country. This is their day, right? This is their high and their low of that particular day. So people who sold up here were in profit, and people who bought down here were in profit, okay? As we notice here on this bullish type 1, we can see that the Asian range, right, the Asian high, hold on, somebody's joining. The Asian high was protected, right? It was protected here. Then we trade lower, we retrace during, another person joined. We retrace during the Frankfurt, and then we move down, wiping out the Asian range liquidity. Then we have London, and then a London retracement. And there's specifics in London that Ivan will go over because this can easily take out Asian range. But when it doesn't, and you get liquidity above, right, we have a POI to the left, and I'll teach you guys how to locate a proper POI. So we have a POI to the left after the London low gets stop hunted in New York. So this is a cascade type 1, right? We have the easiest way to remember this is the Asian low gets taken by London, London low gets taken by New York, all the liquidity is resting above, and that should be your target. Okay. Now, depending on the time of day that this happens, if this happens during the New York Open, like right at the Open, and it hits the POI, you can expect anywhere from 50 to up to 75 pips of movement, which if you get that on an M1 time frame, right, when we're waiting for confirmation in this area, right, this is the POI to the left. If you can imagine that there was something going on over there. Is this not showing my cursor? Hold on 1 second. Okay, can you guys see my cursor or no? Can you see it now? Okay, cool. Because there's a presenter view and then there's an audience view, and I was using the presenter view, so that's why you can see it. Okay, cool. So right here, I'll go over it again. We have the Asians high, Asians low, then we have the Frankfurt stop hunt into London. You get the London retracement. London can either continue higher into Asian range, this would be a different type of schematic, which we'll go over. And then you have your trendline liquidity here. Basically, what you do have trendline liquidity, right? That's a thing. There is trendline liquidity, but there's also session liquidity. So in session liquidity, we have Asian high. These guys are in profit. I want you guys to start thinking about who's in profit when you're trading, right? Like who's in profit at a specific time. In Asian range, we know that the sellers were in profit, okay? Then we get a retracement. They're still in profit. They're protected. It comes down. Whatever was in here gets mitigated, right? Then we have London. London gets in profit, right? Because here we have the like Frankfurt build up, whatever, into a London POI. Then we get a rally. And then these guys in London are profit. And then into New York, we need to take out the London low. All the sellers, all the buyers that were down here are in profit. So we need to take them out into a POI to the left. And there's a specific way that we can find a decent POI to look for. Okay. Everybody here know strong highs, strong lows. Do you guys understand those concepts? If you don't, just put an N. Okay, I'll go over that in a bit because it's very important that you understand strong highs, strong lows when we're selecting POIs to trade from. So anyways, we get, right, the Asian low taken into London, London low taken into New York, into a POI. We wait for lower time frame confirmation depending on the SL. Like if we have a POI that's, I don't know, maybe 5-6 pips, like, and you're really trying to refine that and you miss the trade, that's your fault, you know. For me, if it's 5 pips, I'm taking it. Like I don't need to worry about it. The only reason you would look for confirmation and the way, so there's a different way to look for confirmation than what you're used to, which is just like a break of market structure or stop hunt, break of market structure, return to origin, right? And that's the typical confirmation model. But most people don't use higher time frame to confirm their trades, first of all. So you need to do that. Anyways, as we take the London low into here, depending on the size of the stop loss, you're going to see, and the homework tonight, what I want you guys to do is locate the high and the low of the day in each session, right? So look at the high and low of the Asian, high and low of the London, high and low of New York, and then as a whole, as the entire thing has progressed, where did the low of the day make and where did the high of the day make, okay? And you'll see a pattern forming where you'll see, okay, wow, like New York is always most likely on a bearish trend, going to be the low of the day, right? And then vice versa. So when we look at a bullish type 1 schematic, right, this is bullish. What we want to see, and I'll draw this out on a chart, but we want to see, if you could follow my cursor, is, so the market has this illusion to it where you're in a downtrend, but it always looks like it's in an uptrend. And when you're in an uptrend, it always looks like it's in a downtrend because of this overnight session. So let's say we had a, shit, my mouse is frozen. Hold on. Okay. So let's say we had a, can you guys still see my mouse? Somebody just joined the chat and it kind of messed up my mouse. Okay, cool. So let's say we have a bullish, you know, structure wise, we have bullishness on the higher time frame. And as we go up and then overnight session, we go down, right? And then this whole time, because a lot of people just pay too much attention to lower time frame, they're not realizing that you're in a pullback, right? So this is the pullback. We make the low of the day in New York and then rally at the end of the day, and then the whole thing continues, okay? So you just have to be mindful and aware of the higher time frames. When we're trading, we should be aware of a lot of things at the same time. Like I said in the psychology webinar, we need to be aware of things happening, different confluences. If we're in premium, if we're in discount, if we're at a strong high, if we're at a strong low, we need to be aware of those things constantly, okay? So this is a higher probability if Asian highs create equal highs, right? So if Asian creates equal highs, the probability of it going to take that into the next session, right? So we have the New York low. If this happens at the open, most likely this is going to take this out, and you can hold this trade, and you can do an intra swing at the Asian range, right? Targeting up here. Now, let's say this happens past 930. If you pass 930, you're typically going to get like 30 to 40 pips. And I'll pull up my spreadsheet that I literally have tracked this for a pretty long time of how many pips you get at certain times. As we get later into the session during London close, you're looking at an average of 20 to 30 pips. Okay, so you might not reach the Asian range high. You might reach the midline after this. Okay, Asian low was taken by London while Asian high remains intact. London low was taken by New York. New York trades to a POI targeting Asian highs. Okay, so very simple. Does anybody have questions on this one? It works on all pairs. Not indexes. So indexes is a different story. It works on gold very well, but on NASDAQ and US 30, it's a different timing because we have commodity traders and option traders and all that also plays into indexes. So, and that opens at 9:30 EST, which is different than New York open on Forex. Anybody else before I move to the next slide? Right, I know I see open. Okay, I'm gonna move on to the next slide. Okay, a bullish type 2 is where we have the Asian range, right? And then we have the Frankfurt buildup here, and then we take it out in London, we make a high, okay? And then London comes down and makes a low, and then we retrace, mitigate whatever in here, take out these traders in here, and then into New York, right there. Okay, so first it takes out the high, then it takes out the lows of Asian, then it moves across down into London. And remember, this is a bullish pattern. So we need to make sure that the higher time frame is bullish when we're looking for these type of patterns. Okay, so here we have our POI to the left, we have our New York, and then we have our rally. Now, typically, if the Asian range has already been taken, we're just going to look for liquidity pools at the top over here to TP at or Asian midline. Okay, so from here to here, and you know, if you partial out, you can. To be honest, I don't really partial out. If I do, it's around like 60% on my first partial and then 40% on the rest. And that's when I'm not confident in a trade. So that's just the way I trade. That doesn't mean you have to trade that way. But I trade my setup and my average R. So if my average R is a 1 to 8, 1 to 10, depending on the month, then I'll just close out at 1 to 8. I won't even care if it runs further than that, to be honest with you. I'll just play my strategy and my setup. Okay, so when I say my strategy, it's like I have my specific win rate and then I have my specific R. And once I hit my R, I'm done. Okay, and you know, for Instagram and YouTube, yeah, of course, you know, I'll go like 1 to 20 and just whatever, let it run. But when I want my consistency and I want my my account to grow and compound, I just stick to a specific R and that's it. That's all I need out of the market. Okay. Anyways, so here in this example, I depict just the trend line for liquidity so that you know how to target that, okay? Details, it's better to see Asian highs and lows wicked out with no candle closure above or below, depending on if we're bullish or bearish, right? Look for the, this is order flow on a decline into New York. So clean order flow is basically, let's say we have a decline here, right? This is clean order flow. We have clean order flow, and then now we need to take them out. Okay, so clean order flow, exactly. That's Ivan. So that clean order flow into New York, past London low, and then targeting the liquidity up here. So typically when the Asian range gets wicked out, that's what I like to see into a POI in London. But again, I don't really trade London. That's Ivan's. That's his game. Okay. Any questions on this one? Oh, would you go counter just below the liquidation level high with very small risk, targeting back into the Asian range low, especially with space below, if that makes sense? Let me reread that. Would you counter? What do you mean by counter? You would look for a wick out on what time frame? I always trade on an M15 time frame. So when I see an M15 time frame just wick this out, then I just wait for that. Basically take a short. Would you counter, or so you mean would I ping pong this? On the same trade? Liquidation level, range low. Well, if I break this chart down, basically, right, like if I see a POI to the left over here and it makes sense for this POI to the left, then I can take a sell here. I can take a buy here if the POI makes sense to the left. But for me in this London low, like, yeah, you can possibly like ping pong this, but if I have a POI down here, this is liquidity, right? And we look at this low, it didn't make a new high, so this is a weak low. So I'm expecting this low in London to get taken, right? So we have to pay attention to the storyline that's going on, right? So if we have this like Frankfurt buildup into, and it just wicks, I know that it was just seeking liquidity here, right? And then here we have these lows that London is taking out, right? So we have the liquidity down here that it's taking, and then London fails to make a high, which is an inducement now for the POI below. So we have the NY POI and then the retracement there. Cool. All right. Next slide is just the inversion of the bullish type 2. It's just it's just a bullish type 3. It's just the opposite. It's the same thing, just the opposite. It's where we take out Asian low first, and then we take out Asian high, and then into New York POI, like that. So essentially, we're still waiting for the London low to miss the POI that's here, and then get taken into New York. Would EU's price action yesterday be an example of this model, but never took Asian highs, bullish type 2? I have to look. I haven't looked at any charts today. I've been literally focused on this and preparing, but I'll look. We'll look at it. Okay, so this is literally the same thing. It's better to see Asian highs and lows wicked out with no candle closure above or below. This is a lower probability trade. Asian range stays in consolidation. Asian low stop hunted first in London, and then Asian high taken by London. Wait for POI for London low to be taken by New York into a POI targeting London high. Okay, or liquidity pulls up here. So my favorite setup, like this is my favorite setup. This is the setup right here that I look for on a daily basis, right? Except for this week, I haven't been trading this week or last week just because I've been preparing for this. But this is my favorite setup. So if anybody wants to know like a model that's really solid, this is the model that like I go pretty heavy on. Would EU's price action model, but it never took a high, bullish high, London high. Okay. Yeah, we'll go over that price action. Now let's just go down to the type 4. or type 3, or sorry, type 4. Yeah, we're on type 4. Okay, so bullish, so here is this is the bullish type 4. And go in your charts, like I said, after this lesson, and you guys will see this all over the place. Okay, so a bullish type 4, what we're going to see is we're going to see that New York low being made, and we're going to see a little bit of compression meaning tight range, and then Asian range creates its low inside the previous day's low POI. Okay, so you're going to see this happen, right, where you'll see like New York make a low, and then Asian range will trade back into that New York low fairly quickly, actually. So it'll just come in, and then you can catch a continuation trade. There are two variations on this trade, which Asian low or London low can take the previous day's low. So if Asian range trades in like very close to that New York POI, that previous day's New York POI, the low. Hold on, somebody just entered. Oh, it's Ivan. If it trades into this POI, right, this schematic here, then most likely London isn't going to trade below this. Okay. But if Asian range just trades and trickles, and then we get into London, you can take the London into the previous day's low New York POI. Okay. And then you're going to target the previous day's high POI. Okay. So the POI is created at the previous day's New York to London close low, right? So New York to London close, you're going to see a POI because remember, on that trade that we initially got at the New York low, we're expecting that expansion move up into the overnight session and then mitigating out of it and then continuing. Okay, so this is working together as a model. Does that make sense? So once we have that London close to New York low of day, we'll see Asian range come into it, and we can capture whatever's in here, maybe take a lower time frame play here, but in Asian range, that's going to be very hard, okay? Because in Asian range, I don't know if you guys looked at a 1 minute candle in Asia, it's very choppy and not very clean price action, okay? But if I see a setup like that and it's clean, I'll just take it right off the POI, okay? Also, there's this whole retail logic here, right? You have your support right here, and then you have the liquidity grab into it. So support, liquidity grab into New York POI, previous day New York POI, up into the previous day POI high. And then if we look at the cycle of things, right? So I want you guys to start thinking of connecting it, right? So for example, we had the trade off the New York low into Asian range high, into London high POI, into a sell, into inducement, into another New York low POI. Is that making sense? That's why we call it a cascade, because you can really juggle the market this way. Anybody have questions on this yet? Yes, it's typically taken during the Asian session, but it can happen during London as well. Because if we have let's say the Asian range misses the POI, then we can have London come in and stop punt the low of Asian into that POI. Okay, cool. What did you want me to repeat? Here, I'll unmute you so you can ask me. Sam.
Hello.
Hey, how's it going?
Good evening.
I'm good.
Yeah. Yeah, I was trying to say, can you repeat the last part that you were saying?
Oh, so the inducement part? Yeah, so let's say we have this going in and then it misses the POI, right? The Asian range misses the POI. When we miss the POI, it becomes future liquidity. It doesn't mean that it's always going to take this low into the POI and rally, but it's a high probability that it will. If it misses the POI, moves up and then comes back down in London, then we still have this POI. It's still fresh. So London can come into the previous day's low and then remain intact and continue higher. But if Asian range does take this low, right, or not this low, but into this POI and then moves up, we should be targeting the previous day's high towards London session, right? So towards London session with the Frankfurt buildup, and then we can take another low below this POI at New York. So in New York, so you're basically ping ponging the market on each session. Okay, it'll make more sense as well when we look at actual chart. Okay.
All right. Thank you.
Yeah, no worries. Okay, cool. So interesting. So they can stop hunt below POI in New York. Yeah, definitely in New York, because remember, these are each day's trading sessions. Remember? So this is an entire day trading session, and then we have the Frankfurt, and then we have London, and that's an entire day trading session, and then we have New York. Yep. Cool. Okay, let's go on to NRDs and TDs. Let me clear Ivan's drawings. How the hell do I do that? Oh yeah, clear. Okay, so these are poor trading days. These are days that I don't trade, and you'll see why. So going over like the first setup that we were talking about here, like let's say this was your model, right? If London, right, like let's say this New York never touched the POI, or like let's say New York never touched London, it never took out London, and this is your specific model. This is like the model that you're trading, the model that you're trying to master, because each one of these is a model, and when you master each one, then you can add them together as a confluence, right? Like you can start ping ponging the market. But if you're trying to do that immediately, you're gonna fuck up. Like you're just gonna not really see it. You have to master one of these setups first, so that you identify it, you see it all the time, and then you know how to trade it. So like let's say this is your model, and New York never takes out London, right? Let's say that just never happens. Then there's no trade for me, right? Like with this specific model, like, oh, I didn't ever hit my New York POI, never took out London high, or like, let's say it just started ranging in here and then, took out Asian and then never took out Asian low and never made a new high. Like there's no trade. So you have the confidence of, I didn't miss anything because it's not my setup. But then when you see the specific thing that you're looking for at the specific time, right? So now you're really increasing your odds of a great trade just by mastering one model. Okay. And then when you get better, you can start doing all the other fancy stuff. Okay. So let's go over the NRDs and TDs, narrow range days and trend days. Okay. So if we see a trend day, this is where you're basically not going to have a chance to get in the market. It's just going to fly without you. Okay. There's not going to be any POIs for you to take. And when you're in a trend day, typically you're going to want to be in that trade the day before, right? So this is going to be one of those trades that will happen in the prior session, such as the New York low session, right? Which is the bullish type 1 cascade. So you'll have that and you'll be able to hold through this trade. But let's say you missed that New York, whatever. This is just a day that you just see the market just flying. There's no POI. You have no trade. Okay. So just keep that in mind. Trend days typically happen after a news catalyst, offering almost no entry. Asian will rally or decline quickly, and the main position should have been entered the previous day. CBDR. So you guys know what CBDR is, right? It's a central bank dealing range. It's when the close of the London close to Asian open, right? That's your CBDR. That's your central bank dealing range. And that's when I believe, I don't know if this is facts, it's just what I've studied, is when the market makers or algorithms are deciding where they want to take price. So they keep price in a very tight range and then they expand it after the open. And then there's also gapping hours and whatnot where they can, decide where price should go next. CBDR trends and builds liquidity onto Asian range. Not really important. It's just this is going to be a trending day. Asian range, sorry. Asian range trades back down into the New York POI from the previous day. You can target the previous day's high. So this is basically saying if the Asian range does trade into the bullish type 4, then you can take that. That would probably be the only POI that you would get on this type of day. Okay. And trend days. Okay. So narrow range days are, it's basically, I don't know what happened to that slide, but basically a narrow range day is where you see price staying within the Asian range or just wicking around it, like back and forth. Okay. Asian range, if Asian range doesn't expand during London more than 20 pips, then it's a narrow range day. So you'll just see price just going back and forth, very tight price action. That's typically going to happen after this huge expansion. So after we get this large expansion, quick aggressive move, usually after NFP, you're just going to see the price just kind of go sideways. Okay. And those are days that you don't want to trade. Okay. Now the rest of the slides in this, Ivan's going to teach you guys during London. So I'm going to save that for him. I use 20 for Asian range. And I'm always on EST time when it comes to my charts. Okay. So right now I'm going to pull up a chart and we'll go over this. Switch my screen. Okay, can everybody see my screen? Okay, cool. 1 second. Okay, cool. Let's go over, because I did this the other day, just for example purposes. Okay, so let's start from the beginning over here. Okay, so if we look at, let's look at a 4-hour chart real quick. Okay, so over here we have the POI, right? They caused a low, and created a high, a lower low, and caused a high. And then here, price failed to break structure, right? So here we can see that price failed. It made no structure. Let me turn on these indicators. Actually, I'll turn these on after because it will make the charts look really messy. When we see this type of price action, when we have this aggressive move down like this becomes something that we call a red zone, right? So this red zone right here, we can be buying once structure starts shifting. So once structure starts shifting, we can buy up until this level. At this point, you should be closing all your buys and waiting for something to happen. Okay. If price decides to continue up, then we can look for further accumulation to go higher. But once you see this right here, you most likely want to close all your buy positions and get out of the market. Okay. Let's go down to, let's see, 1-hour chart. Okay. And we'll start back here. Hold on 1 second, guys. I'm going to grab some water. My throat's a little dry. Okay, so we're going to use a 1-hour, 30-minute, and 15-minute chart on this. I'm not going to do 1 minute because it's going to take forever, but you guys will know how to enter on a 1-minute chart if a 1 minute is required. Okay, not every entry you're going to take is going to be a 1 pip SL. Now, if that's your model, right? Like I'm saying, you have to own your model. So if your model is saying, I only take 1.5 pip SLs every time, if I don't get that, then I don't take a trade. Okay. Depending on your model, right? You're most likely going to miss a shit ton of trades, but you'll have a ridiculous R, but you'll miss a lot of trades. You might get 1-2 trades a week, maybe. Anyways, so here, let's break this down. Let me go to a lower time frame actually. Let's go to M30. So typically, like when I start my day, I'm like always looking, and we'll go over that as well, as like I'm always looking at strong highs, strong lows, where we're at in price, premium and discount on the higher time frame, and then I'll go down to an M30 and just kind of see what happened on the previous session, and then try to look for trades and whatnot and setups. Okay, so on this particular day, we can see all up in here. Let me put this in backtest mode so my indicators will show. Okay, cool. That's on. Previous week's low, and then day separators. We'll do that. You know, okay, we'll turn them all on. Is this clear to you guys? You guys can see this clearly, or is it small? I want to make sure everybody can see it. Just type a Y if you guys can see it clearly. Okay, great. Okay, so on this particular day, everything here, right? We take the price down past Asian range. There's a bigger POI on the left on like the weekly time frame, but we're just going to look at this right now. We see price does what? It makes a high in New York, retraces back down into this CBD hour, which is the central bank dealing time. You could have taken a trade here, but it's not really a setup, but you could have taken a trade here. Then we have our Asian range. We make a high in London, and then we have a retracement in New York coming down at the low of day right here. Do you see this? This orange box right here is London close, and this one right here is New York. Okay, half of this is New York because the settings on this get messed up, so I just leave it the way it is. If you have a better indicator, that's cool, but you guys should know the timings by now. So right here, okay, this is the New York open, and then this is towards London close. So we have the retracement, and on a lower time frame, this is like a M15 POI or M5 POI, and you catch that retracement back to Asian midline. Why? Because look at Asian range, the high got taken, right? And at this specific time, we're expecting it to hit Asian midline, and that's why your TP should be right here, Asian midline, okay? From there, we have an Asian range expansion, right? So when I see Asian range expanding like this, it's hard to decide on a POI. For example, if we look, I'll show you guys another example after this one. This is not a good example. Here on a higher time frame, this was an OB, right? 2 up candles, and then we have this downtrending move, and then we have our New York pricing here. Okay, so you see where the high of day is made in New York, and then we catch that, and we can hold these trades down to who's in profit. These guys are in profit, right? All these trend line sellers, sorry about that. All these trend line sellers here, right? We're in profit. They get taken out, mitigate whatever was in here on a higher time frame. Price enters during the New York to London close. We can hold this trade knowing that we should be targeting the liquidity below here, right? Because after these guys got taken out of the market, we have buyers here, and this is a trap. Okay, why is this a trap? Can anybody explain? Exactly. Good job. This is a weak low. It made no new high. It's a trap. instantly wiped out, okay? Now we have an Asian range. Again, we should always be checking our Asian range of how many pips it is. And I'll tell you why. Okay, so when I'm looking at Asian range, I like to see an Asian range that has a pip count of anywhere from 15 to 20. If it's more than that, I know that the Asian dealers or market makers, whatever you want to call them, the algorithm, they didn't accumulate orders in Asia, right? I like to see an accumulation in Asia and then an expansion move. Do I define a break of market structure stop hunt with body closure above or below wicks? Above wicks. So like, for example, BMS would be, you know, this would be a break, but this is an internal break. This is an external break. Okay, we'll go over that. Okay, so now we have our, I need to turn these on, sorry. Okay, so we have our day separators. This is a new day. We have the Asian range expansion down and then back up, right? So we have an Asian low here. Asian highs taken out. Let me remove this. Okay, so now we're making a what? A new high, right? We have a strong low, creating a new high. Okay, pay attention to this one and see where the price goes. See the timing? Right here, New York. Okay, and what type of cascade is this? Can anybody answer that? Exactly, type 1. Okay, it's easier when you have schematics, right? Because now you know what to look for. You also have the buildup right here. Okay, we take out the liquidity, and what are we targeting? Asian highs or previous day's highs, whatever your forte is, okay? But you can see that there is confirmation in this as well. We have stop hunt, break of market structure, turn to origin on a lower time frame. Okay, what I mean by that is just it's a basic QM pattern. Okay, does anybody know why? So for example, if we look at a QM pattern, the reason why this works really well, depending on how you play it, and we have an entry day the other day, another day, so I'm not going to go over too much on entry today. So most retail traders or, you know, supply and demand, Quasimodo traders, what they do is they'll take a buy from here and why from here, because it's false support, right? They're expecting this to turn into support. SMC traders will take it like this, right? A stop hunt below support into this POI here. And what do 40 traders do? This is an advanced QM, by the way. 40 traders wait for this, wait for the stop hunt, wait for the break of market structure, and then inducement into the POI. Okay, so this is your inducement here, right? And this is also your inducement. Let's say this happens. Okay, now you have this false support being created. They're expecting that third tap, and instead we wipe that out into the POI below. Everybody got that? Just for future reference. Cool. Okay, so now we have our next. You see, at the same time, we get the London high and the low, I mean the New York high and low. So we have New York low, London close high. Okay, so here we're taking out the Asian range. First, we took out the Asian low. Right here, we have, this is our New York high and then our London close high. There's possibly a POI in this very tiny little thing, and you would have just caught Asian midline because of time of day. As you can see, this candle right here dropped to right about almost Asian midline, right here, dropped down to here. Yeah, exactly Asian midline actually. Right there, see? Asian midline. Then you also have this POI. You could have bounced this back and forth, but I don't know why you would want to put yourself through all that headache. Okay, there was a lower time frame POI here. Exactly here was an M1 entry. And then you can bounce the market back and forth from here, taking out the liquidity above London in what time? New York into this POI here. Sorry, this should be drawn from the OB here. There we go. So on a lower time frame, you could have waited for confirmation and then taken a trade here up into clear out this equal highs up here. Okay. So when you see me using this ladder right here, it's literally just giving me an idea of where a POI is going to rest. Okay, so for example, this Asian range, right? Let's check the pips. And you only do this when the pips are below 20. Okay, so this one, it's 17 pips below 20. So we can go ahead and pull this out and we can see the first standard deviation lies directly. Good, good. I'm glad you're seeing this. Good. If there's no inducement, would I take this trade? It depends on the, whatchamacallit, the, why can't I find my words right now? It depends on the timing and the structure and the stop loss. So if there are times where I can just enter a trade based off the POI because I've seen this model so many times. And if I'm lazy or if I have there's something you'll develop. It's like a trader intuition that you'll know when an aggressive move is gonna most likely take place. Like if we're at this area up here, which is our red zone, right? Like I'm gonna expect, like I could take a trade just based off the POI because I understand. Let's say for example, because not only is there timings, right? These specific timing windows, but there's also NFP timings, right? So let's say NFP trades into our New York high and it's making a false move higher, right? Okay, and this is all gonna make sense when we go and zoom out of this. You're gonna see the weekly or the daily cycle instead of the intraday cycle. Okay, so if let's say NFP or whatever trades up into here and you don't want to miss trade because that thing can just fly, you can just enter off the POI and just catch whatever amount of pips, or you can wait for confirmation. It's really up to your model, right? And over time, you'll develop an instinct like, okay, like I'll take the trade off this, right? So here, right, we have, so you can see here the standard deviation of 1 is perfectly aligned with the POI. So it's perfectly safe to take the New York low after, right? Stop hunted, London low, stop hunted into New York, into the POI, 1 standard deviation from the Asian range. And you can see how it lines up perfectly, okay? We can see here, how many pips is this? Shit, it's like 15 pips, something like that, right? I already have it marked. It's like 16 pips, so it qualifies for us to use our ladder. And if anybody needs the settings for this, I'll show you right now. It's literally just the deviation. So it's just 0, 1, 2, 3, 4, -1, -2, -3, -4. Okay, the reason I use this is because price can only go so far. right? Unless there's like some type of NFP news, that, or a very rare situation where the market just tanks. But typically, price is going to move a certain deviation. So I know above 4 is most likely price is not going to reach past that unless Asian range is like 8 pips or something. Then it's this Asian range needs to be between 10 and 20 pips at least, right? And if it's closer to 20, I like it better. And as we can see, the high was made right here at the third standard deviation. Okay, so we can see that right there. And then we get, whatever retracement off of that. So this can be used as POI selection, or it can be used as a target. So if we see a POI up here and we see that our third standard deviation also lines up with that POI, then most likely you can take profits there. Okay, and then obviously you get your NFP, and then you get your drop, and you have that third standard deviation pretty much calling out the high of that particular session. Okay, and then if we look, I don't know if you guys can see this or if this is covering it. But we had that low that was made before. So this is where we come to our next point here. Where is it? Here we go. Okay, so typically Monday and Tuesday are going to make your high or low of the week, right? So if we trace back to this, okay, we can see Monday made the high of the week here. Okay, and it's either going to be Monday or Tuesday that'll make the high of the week, but typically it's going to be on a Monday. So we'll make the high or low of the week, and we keep this in the back of our heads, okay, where we're at in price. Okay. So when you're thinking about trades, there's 3 questions you should always ask yourself. It's where is price, where am I at in price, and where's price most likely going? Okay. So when we're on Monday, where are we in price? We're right here at the high. Okay. Tuesday is starting to form lower lows. And then Wednesday and Thursday is typically going to be your midweek reversal. Okay. So it's going to typically be your low of the week. Okay. So here's your low of the week on Thursday, in between Wednesday and Thursday. And then what are we doing? We're making a reversal, but for what? To mitigate out of here. This is where price is most likely going to mitigate out of that higher time frame POI that caused all these lows, right? So this is our retracement, which we're able to get in the market during these retracements, right? We're basically following the order flow, okay? So pay attention to this. So Wednesday, Thursday, we make our low, we trade up, we mitigate. Friday, we have our pullback up, right? So on this Thursday, we have this retracement, and then Friday, we have this rally. Then Monday comes. We have this new high this low being made on Monday. Then we have Tuesday, right? Tuesday is not trading past Monday, so we made a higher high. So we know Monday is creating the low of the week, right? Since Monday is creating the low of the week, Tuesday didn't trade past Monday. Wednesday, what happens? Midweek reversal. So this is a very high probability setup because we have the timing down, New York right here. We have our POI at the top. We have our standard deviations. We have our Wednesday midweek reversal. So all those confluences, right? All those confluences should tell you this is going to be a very high probability trade. And then we have our news release at that same time. And then you can see you get a nice trade from there. And this is on an M30 time frame. Okay, and there was 1 minute entries on this, by the way. Okay, let's continue. Is this making sense to you guys? Is there any questions? Let me know if you guys have questions. Okay. So remember how I said after a big expansion move, typically you're going to get these like narrow range days. Here's your New York low right here. Okay. Or yeah, your New York low and then your New York POI that you have. Cycle high low on Monday. This makes sense. And I think will make more sense once we do homework and back test. Yes, the cycle of highs and lows on Mondays with midweek reversals, very powerful. Thanks. Cool. Cool. So we have this previous day low, but we don't have that Asian type 4 going in here. So, but we do have that previous day's low depicted by what do we have? 2 standard deviations of the Asian range, and this is the POI that we have currently. Price trades into it. We have a break of structure here from this low causing a new high. So this is a strong low. So you should get, a trade there. But we can see how it's a narrow range day after an NFP news event, after a strong aggressive move. Okay. So that's why I'm saying you need to catch the trade the day before into the POI. Okay, I'm gonna go over, I think you guys get the gist of how this works and you can start studying it and back testing it. And you can do this on any pair, EU, GU. And you also, this works really well on certain market conditions, okay? For example, when we're in a consolidation type of period, let me open this chart up more and remove this stuff. Okay, when you're in a consolidation, this is the best time to compound your account because you can catch a lot of trades when you're in this accumulation phase, okay? Because this is on a weekly POI that traded into here. Your weekly POI is in here, this body of this candle. The way I draw POIs is a lot different, and I'll go over that actually right now. So basically, when I see a POI, like, and whoever it's taken my Zooms knows this. So you see this POI here, we have a down candle, up move, right? This POI here is valid, okay? This is a valid POI. We have a stop pump below, and we just need to include timings, but we're not gonna do that right now. We're just gonna look at the actual price, okay? So when this wick right here, this wick never touched this wick, right? So we have imbalance there. So I'll use the entire candle, right? The entire thing. But if it didn't, like let's say this came and touched the wick, if this wick right here, so if this is fresh, okay? So keep that in mind. This is a fresh POI. This candle, the wick never touched this wick. So I'll use the wick because I always get questions, do you use the wick or do you use the body? If this wick touched this wick, then I'll use the body, okay? Now let's say, for example, right here, this POI. This obviously is a lower time frame OB, but let's just use this for the sake of understanding. This would be imbalanced price action because this isn't a down candle, right? This right here would be imbalanced price action. Now you can refine it to the imbalance, but I rather refine it to the OB right here, the last down. Okay, now if this wick over here traded towards this wick, then I would just use the body. Now, if the body of this was taken and all I have is this, like if it was taken by this candle and I'm really trying to find a POI, I'll use the IPA, the imbalanced price action, situation right here, right? Instead of the wick, I'll use the body of this, okay? Something I like to mention too is my favorite types of POIs are doji blocks. So it's just basically a doji or a hammer type of POI with the down candle being either a doji, a D block, or being a hammer to trade from. Okay, so I just want you guys to understand fresh areas. And remember, now that this price up here has been tapped, until we get further confirmation, I'm not looking for any more setups that have to do with any of this past price action right here. Okay, so I'm not like using like confluence of anything over here. This already met the goal of tapping into here, and we had that build up. So if we look back over here, right? If we look over here from that Monday that created that low, which I believe was somewhere over here. Anyways, look at how we build up liquidity for what? The big sell, right? So we had our low here, liquidity being built, bam. We get right into our red zone, and then price drops and takes out everybody out of the market from the start of this trend line. Okay, so that's trend line liquidity. Let me remove this and this. So here's your trend line liquidity, right? People are buying, and it's valid. This is valid retailing. You have valid buys on the trend line. That's perfectly fine. We're waiting to tap into our red zone for liquidity to be taken below. That's why I'm saying close your trades here and maybe take the opposing side. That way, you already had your buys play out all the way up to here, and then price comes down and wicks everything out, takes everybody out of the market, and then continues whatever pattern it wants to continue afterwards. So up here is our new zone, our new red zone. I'd be looking for possibly sells up in here or buys down in here up until we get up in here. Since we haven't tapped into the, have we? We kind of have, yeah, we have tapped into this. So for now, I wouldn't be looking for sells. It's already kind of done its thing. I'll be looking for buys until new setups form that I can get on trade, maybe a new weekly cycle, and start the process all over again. Okay. And then going back to, I'm just going to delete all these drawings since you guys have the recording now. Strong lows and strong highs. When I come to my chart, I'm always starting from the daily time frame. That's just how I do it. So based off those lower time frames, like you have multiple confirmations and confluences that you can be looking at, right? But then you also have to take the daily into consideration and see where price is at, right? We don't want to be selling into supply, buying into supply and selling into demand. We don't want to be doing that. And what I mean by that is, okay, like for example, we have this imbalanced price over here. It wicked below it, it's fine. There's probably some lower time frame shit on there. I'm not too concerned. All I'm looking at is this accumulation right here. Okay, why would I want to be selling this right now? You know, until we get a break or something, then I can look for sells, but I don't want to be selling this. I want to be bouncing the market around into this and seeing where we can take price next. Okay, not only that, I'm looking at premium and discount, right? And if premium and discount is too hard to see here, right? If it's too hard to see, we can go to a lower time frame. Let's just say a 4-hour chart. Okay, so our last leg up here, right? This is all unmitigated. We can see that price tapped into our supply right here, which was our red zone for sells, right? In premium. When we're in a bearish trend, when we're in that bearish trend, like this, or shit, where's that tool? When we're in a bearish trend, I only use premium discount for premium, okay? So if I'm in this trend, like I'll be looking for my premium areas in these legs, okay? Why am I not looking for discount? Because let's say this high created a new low. So I need to wait for price to reach back up. Oops. I need to wait for price to reach back up. Why does it keep doing that? Oh, it's because it's on this thing. I need to wait for price to reach back up into premium, right? Because I know this is a strong high. I have my premium here. If you're not paying attention to this, you may be just buying at the midline in the middle of the range or selling in the middle of the range and possibly get screwed, right? Like you always want to be at the edges of the range. So if you were taking buys here, you need to have some reason to take buys here, like EU, for example. These drawings. If we look at EU daily, we can see what happened here. Okay, can anybody tell me why once EU hit this red zone? A red zone is basically your higher time frame push, your gap, right? Your imbalance that created the new low. So we broke the structure here from our red zone, and then price gradually trades back up to it. Now, what happened here is, right, we had this range, we had a range here, price continued to fall, right? This became a strong, what? Strong high, right? So we have a strong high. What happens after? Price breaks right through it, boom, right? So wouldn't it make sense that this becomes our strong low? And I should have been looking for buy continuations here, right? Now this also is a sell, but what are we selling up into? We have to understand what's going on this higher time frame, right? So we had a stop hunt in here, we had a trade that went in here. We can take this sell. We don't want to take it for new lows because structure is not telling us that. Structure is telling us we had a new high being made higher than this high. Price is retracing back down into the strong low. So you could take your sell from here into here and then your buy from here. Does that make sense? Cool. If you're still uncertain about strong lows and strong highs, all of you should have my book right now because it's in the group chat, so you can read through it and then learn all the basic stuff. Without the basic stuff, this stuff's gonna fly over your head. But you guys have access to that. Okay. So like my next point for EU sells, like if we were to get sells, is right here. I'm looking at this imbalance. And this would be for like more of a swing type move. Okay, and if I do premium discount from this high to this low, that's a big premium zone. Okay, so I would be looking for sells in here and maybe buy continuations until we get there. Okay, there still could be short-term sells in this leg here, right? Because price could just be creating order flow and lower highs and then push, but that's why we hedge, so we can be buying and selling at the same time and setting things to break even. Which one are you talking about? This one? It did break structure. This is our last, you see this is our last imbalance before this whole leg? Yeah, this caused the entire leg here. Technically it caused it from up here, right? But these already got filled. It actually might be up here. So this is an OB, right? So we have, this hasn't been mitigated yet. Yeah, this hasn't been mitigated, but we also have imbalance up here that's never been tapped yet. So there also could be sells from here, which is obviously going to be higher probability. But I like the OB here because we have orders trapped. Okay. And then just following structure, just following, right. Just following the structure, right? Strong highs, strong lows. For those that don't know, I'll go over that real quick. But this is very rudimentary stuff. So strong highs is just strong highs and strong lows is just lows and highs that are creating new lows and new highs. One thing though that we need to go over, and I've gone over this many times, is what a real break of structure is. Okay, so we have a break of structure here. This is a high. This is a low that causes a new high, right? Like this. A lot of people would say that this is a break of structure, but for me, that's not. Okay, for me, this would probably be inducement for this liquidity here, or for this OB here, until this breaks. That to me is a break of structure. Okay, so this low that caused a new high right there. This caused a new high. So for me, this is a break of structure, not this. Okay. And I see a lot of traders using this as your break of structure, but that's, for me, that's not how I do it. Okay. And then also, let's say that this does happen like this, right? And then we get the break below here, and then we have support turn resistance. We're going to get sellers right here because they're going to believe that this is the next sell zone right here. And that's not the case. What we're going to see is that was most likely inducement for the POI up here. Okay. And then this would be your valid trend line retailing. So you would have a valid trend line. So you have the confluence of that. Okay. So you have your trend line, you have this support being induced and then coming down. I mean, this, not support, but resistance. So trend lines do work. Don't let anybody fool you. Support and resistance does work when you have the right confluence with it. Okay. Any questions? Cool, cool. I like the behavioral structural change concept of breaking the high and low that caused the higher low. Yep. It's very key, right? See how like this low never broke this high? It wicked it. Actually, it created equal highs, but it never broke it. So what happens? This automatically becomes liquidity. That's why it gets ran through. Yep. Cool, cool. All right, I'm going to wrap this session up, and I'll probably be on for the London one with Ivan. Ivan, do you want to say anything? Here, I'll unmute you real quick.
Hi guys, we can go over a daily cycle right now, if that's all right.
That's up. Yeah, that's up to you.
All right, I'll share my screen and show you a few stuff about Asia session. If you can just let me share.
Yeah, 1 second. Coast.
I'll just give you, let's say, a map of what happens when we look at the intraday possibilities to trade. Just a second, let me share. Can you see my screen?
Yep.
All right. So I don't know, guys, how familiar you. I'm usually swing trading, but when it comes to intraday trading, I'll show you just a few examples of what actually happens in the market when you're trying to scalp. Let's go anywhere. Let's go anywhere. Let's see. Let's see. All right. I can't see your chat, so if somebody is typing something, let me know. So basically, this is Berlin time. So I don't know how familiar you are with the Asia session, but Asian session's job is nothing else than to create like a fake trend or a build-up. The first part of Asia session is usually the fakest of all fakes ever. It doesn't do anything. It doesn't make any sense. The second part is the one that usually will create a fake trend, so like a fake build-up. The Asia session, I'm not familiar. I don't know, when do you guys think it starts and ends? For me in Berlin, it's from 23 to 7 a.m. And the Asia session usually its own high and its own low needs to be taken out, right? But that's what usually everybody knows, right? Everybody knows about Asia session, yeah? What people don't know is that from Asia session, after Asia session, the London doesn't really start. London doesn't really start here. What starts is Frankfurt. So Frankfurt starts from 7 to 8, from 7 a.m. to 8 a.m. And Frankfurt's job is nothing else but to be induced or to create a stock hunt by London Open. So Frankfurt's job, Frankfurt's high and Frankfurt's low need to be taken out by London. Frankfurt's high and Frankfurt's low will usually take out Asia's high, Asia's low. Usually. Let me find you other examples, but it always tends to happen. You can see here that Frankfurt, this is Frankfurt, by the way, Frankfurt needs to be taken out by London. Frankfurt always needs to be taken out by London. Frankfurt's high was taken here by London. Frankfurt's low was taken here by New York, the true New York, not the retail New York. They will never give you the, when it comes to session timings, of course, they're not gonna give you the exact times that BFIs or banks are entering, right? You should know that they're not really telling you the exact moment that the New York or London start, okay? It's a fake shit. Don't ignore the thing you see online, on internet. So basically, Frankfurt is from 7 to 8. It's not London. And Frankfurt's job is just to get stock hunted by London. These are the traders who are entering here around 7, thinking London starts. It doesn't have to do anything with London. London doesn't start that time, okay? I don't know what are you typing, but I hope you understand what I'm trying to say. Yeah? Frankfurt needs to be Frankfurt needs to be taken out. After Frankfurt is taken out, you can look for reversals or you can look for sells. And you can see multiple examples of that. Every time, even here, I mean, all the time. So Frankfurt high, Frankfurt's low, after it has been taken out, you can look for sells. Yeah? Even if you are gonna observe this small piece, after Frankfurt's low has been taken out, you can look for buys. This is 5 minutes time frame. We're gonna jump on 1 minute, but even from 15 minutes, it's easy to see. Let me just give you better colors here, like this. Just a second. All right, you can see here, it's always the same. Frankfurt's high has been taken out, Frankfurt's low has been taken out. The London's job is to take Frankfurt session before, okay? This second part of Asia high is giving you a fake trend. It's always a fake trend. We should wait for London to be taken out, for Frankfurt to be taken out, and then look for your trades, okay? There is no point in looking for this order block if you're trading order blocks. There is no point in trading, looking for order block here, thinking this is now gonna create an order flow. We need to wait for this small piece here to be taken out. Okay, I can show you multiple examples that it always keeps happening. Frankfurt is nothing else but a fake manipulation. It's just manipulation. You need to wait for it to be taken out, for this to be taken out. If you have Asia low and Frankfurt's low being taken out, you can look for reversals. If you got Asia high taken out and Frankfurt's high and Asia high taken out, you can look for reversals. I'll give you the exact times of this. I'm just pointing out Frankfurt sessions. Frankfurt session always needs to be taken out. If you were to buy here, your take profit above Frankfurt session. If you were looking for a buy, you're not going to look for this order block. You need to wait for Frankfurt's low to be taken out, right? Everybody understands that? I don't know what they're typing.
Yeah, they're saying yes.
All right. All right. Do you know about London Open? Everybody knows about London Open, right?
Elias doesn't.
So I know a lot of you are in USA, so you don't trade London Open. But basically, London Open starts around 8. So once Frankfurt is done, London Open starts. London Open starts around, sorry, that's earlier. London Open starts around 8. After London Open has started, the London Open is not exactly a place to enter. You need to wait for London. That's a retail mindset of London Open. London Open will still give you a manipulation, and then you need to wait for a true momentum of London when it starts around 9. So if you're gonna wait for perfect timings, wait around 9. 9 is the true momentum of London. Like you can see here, this is 9 o'clock for me. I don't know in USA, 5 or 6 hours.
London is 2 a.m.
2 a.m. You're probably not gonna trade London, guys, but if anybody wants to stay till 2 a.m., 9 a.m. my time is the true London colors. So you need to wait for London 9 a.m. to start trading. All of this before is just a manipulation, a building of a fake trend. The building fake trends, fake order blocks, everything is fake. There is no point in looking this stuff. You need to wait for London to start at 9, and you can enter the true London, the true London timings are from 9 to 10:30. When it comes to entry points, when you're looking for entries, everything from 9 to 10:30 will be all right to take as an order flow. Okay? Everything before that doesn't really make any sense. They're never going to tell you the real timings of London, right? We need to figure out on our own. So from 7 to 8, it's not London, it's Frankfurt. Half an hour after London Open, you can kind of look for trades, but perfectly, the perfect timings will be 9 o'clock, 9 a.m., from 9 to 10:30, okay? You can see example here, from 9 to 10:30 would be loads of perfect opportunities to enter. Same thing here, from 9 to 10:30, you can look for yourselves. Of course, you need to see Asia and Frankfurt Sky being taken out. Same thing here. From 9 to 10:30, look for your entries. Don't look at before. You understand that this has nothing to do with anything. Just fake stuff. From 9 to 10:30, look for your entries. Okay? When it comes to New York, let me find you a good New York. This one's good. This one's good. When it comes to New York, they say New York Open starts at 13 p.m. Right? We know that New York Open starts at 13 p.m. We know that's not really true. New York doesn't really start at 13 p.m. Everything around 13 p.m. is just a manipulation. The true New York starts at 14:30. Let me find you, there's loads of examples to when it comes to 14:30, how it just explodes. 14:30 is here. You can probably see already 14:30, and you can look for yourself. It's always 14:30, not always, but somewhere around 14:30 p.m. till 16:00 p.m. my time, you can look for your entry opportunities. Okay, everything before that is manipulation. It needs to be taken out. They're manipulating the market, thinking that the New York starts at 1300. If you want to enter, if you don't really have time, if you really want to enter before 13.0, you should probably look for your opportunities around 12:30 p.m. 12:30 p.m. before the retail New York opens is a good entry opportunities. So for someone who intraday scalps or whatever, the best opportunities, if you're in Berlin, is from 9 to 10:30 and from 12:30 to 13 is good. If I was to trade New York, sometimes I do, I would jump on a trade from 14:30 till 16. Everything before that is just fake. It doesn't give you anything real. They're just creating manipulation so they can kick you out. Okay? I don't know if everybody understands that, but you can see lots of examples where we need to enter before and not at 1 o'clock. 1 o'clock here, building it. A fake trend, 14:30 till 16, you can look for your entries, right? 9 to 10:30, you can look for your entries. The job of New York is usually to take the previous London, okay? Usually, not always. Usually the London the New York momentum from 14:30 till 16, its own job is to take the liquidity of New York, of London.
Yeah,
Of
so
London
like if so depending on the time, like if it's getting later in the session, like London close or whatever, don't expect it to take London high. But if we're getting the 8:30 manipulated price time, then you can look to take the London high.
Yes.
Yeah.
These are the timings you should use if you're intraday scalper or whatever. Even if you're not intraday scalper, even for things I use it, you should know that the job of New York is usually to take London, the previous session. The job of London is usually to take the previous session of Frankfurt. Okay? And the second part of Asia session is usually building the fake trend. We can see it all the time. It just keeps happening. They're building a fake trend in the second part of Asia session. You got Frankfurt that needs to be taken out. Either Frankfurt's low is going to be taken out first thing in the morning, and then you can look for Frankfurt's high as a TP. Frankfurt's low and Frankfurt's high, yeah? These are the timings. If you want to set it up, my indicator basically is just showing me, kill zone indicator is just basically showing me the momentum during London and momentum during New York when I should be looking for my entries. Everything before, everything after or in between, it doesn't make any sense for me. Okay? I wait for Frankfurt and Asia to be taken out. My take profit will definitely be below these timings here, right? New York starts for me here. It doesn't start here. It doesn't even start here. This isn't the one I'm gonna look for, okay? This is just fake, and I'm looking for true New York colors around 14:30. Okay, so if you want to set it up, you can set it up like this. It gives you a map of what to look during intraday sessions.
Anybody
Also,
have questions?
Sorry?
Does anybody have questions before he continues? No? Okay, yeah, go ahead.
Also, there is a thing called London close, and London close finishes around 17 p.m. London close job is usually not all the time to give you a reversal. When I say reversal, it should kind of take New York's low or high, but it will give you a reversal. It will give you a reversal. For those people who trade around 17 p.m. in Berlin, they should wait for London close to happen around 5 p.m. and then they can look for reversals. Everything before that, I wouldn't be looking for reversals. Yeah.
Cool.
Trying to give you examples of reversals. You can look for reversal here, move on, but still a reversal. You would buy here, right? You also, let me go on a high time frame. When it comes to scalping, if Frankfurt high or Frankfurt low hasn't been taken out, you need to expect that the next day should be taking out Frankfurt's high or Frankfurt's low, Asian's high or Asian's low, right? I think everybody should understand that Frankfurt's high and Frankfurt's low, it hasn't been taken out. You should be looking for a previous day to take it out. In this case, every Frankfurt session has been taken out. You can see it can happen quite often that every Frankfurt session has been taken out. If this Frankfurt it has been taken out here, it has been taken out here. I'm trying to find you somewhere where it hasn't been taken out, but Frankfurt session is usually taken out early in the morning. But if it hasn't, you should look for your entry somewhere around Frankfurt session being taken out here, and then you can look for your buys. Especially if Frankfurt session has been taken around London close, that's a perfect opportunity. So you wouldn't look this as your order block, right? You understand that this doesn't make any sense to be an order block. There is no volume in here when it comes to Frankfurt session. So this is invalid order block. You need to wait for this to be taken out. I'm trying to give you a higher time frame. Examples. Another thing is that usually the momentum of so New York momentum and London momentum entries like this from 9 to 10:30, from 14:30 to 16 are the ones that are gonna give you most valid order blocks. Okay, they are most valid order blocks. You're gonna look for most valid order blocks in those times because they are the ones that gave you momentum. So instead of, you're gonna look for order blocks inside of here if they didn't taken out by previous day. I don't know if you understand what I'm trying to say. When it comes to order blocks, you would look for order block here instead of here for the next week or next day or whatever, if it hasn't been taken out. You know what I mean?
Yeah.
Order blocks are always inside of momentum lines here. Inside of these momentum lines here, you will look for your order blocks. Everything in between was just manipulation and it didn't show you the true momentum. So order block for London would be here. Yeah. This doesn't make any sense. Okay. It doesn't make any sense to take this. Even if it's any kind of supply and demand, support and resistance, any kind of stuff, this doesn't make any sense. This is where the true momentum started, even accurately if you want to look at the wick. But you should always look at it from inside the momentum lines. Okay? They are giving you the POYs. The POYs are usually these momentum lines here. Everybody understands that, right?
Right. Hey, Ivan, can you, because I keep getting questions about the timings, can you change your timings real quick to UTC -4 so everybody knows exactly the time?
New York?
Yeah. So they can calibrate it to EST so everybody knows EST.
Okay. Just so you know, this week, because it's winter time. Don't look at this week. The timings have changed 1 hour ahead, but next week they're gonna come back. So ignore this week when it comes to this session times. Everything will come back to normal next week. These are the timings for Asia session from 17 to 1. If you can write it down for them somewhere. From 17 to 1 a.m. No wonder you don't trade London. And London momentum starts at 3 a.m. till 4:30. New York starts at 8:30 till 10. Frankfurt, for you guys, is from 1 a.m. I'm gonna get confused now. From 1 a.m. to 2 is Frankfurt. And Frankfurt is a decoy. It doesn't do anything. Yeah?
Yep. Cool. I
The
put it in the
second
chat.
part of Asia is a decoy. This is all decoy. It doesn't have to do anything. We have to wait for this to be taken out. I know loads of people in London traders wake up at 7 just to trade. They get taken out a lot. There are not many examples where 7 a.m. for us in London or Europe, it has the right momentum. There are not many examples. It never really has the right momentum. You need to wait for it to be taken out, and you need to wait for it to be taken out so you can look for your entries. Okay? So when it comes to London, like I said, 3 to 4:30, New York from 8:30 to 10. Oh shit, it sucks to be in USA, man.
Yeah, you either have to be
Look
up
at
late
that, you
or
need
up
to wake
really
up.
early.
Yeah. All right, I'll change back the times because I don't
Yeah,
understand.
go ahead.
All right, I hope you understand that. So it's the job of this momentum lines is to take the previous momentum line. The job of these momentum lines on a higher time frame is to give you the higher probability POY. I'm telling you the high probability POYs are exactly those momentum lines, okay? No need to look for POY, I don't know where. You just find it inside of momentum lines, okay? Inside of those zones. When it comes to New York, I forgot to mention, from 13, I don't know if I mentioned, till 14:30 is just manipulation. You do not want to enter around these times. From 13 to 14:30, that 1 hour and a half, you do not need to look for entries. 14:30 is when you're gonna look for your entries. Everything before is just manipulations. 14:30 is your entry. Fake trend is building around 13 p.m. Sorry for me. 13 p.m. till 14:30 is a fake trend. It doesn't give you anything. They say at Google or wherever, everybody says New York Open is 13 o'clock. New York Open is actually 14:30. Okay. They say London close is 16 o'clock p.m. Or if you want to be accurate, London close is actually 17 p.m. They say London starts at 7, which is not correct. Frankfurt starts at 7 and finishes at 8. London starts at somewhere, there is a gap. There's something that's called gap, but we don't need to go over that now. London starts around 8:30 and finishes around 17, right? London close. London open is 8:30. There is a possibilities or entries around 8:30, but I prefer 9 because it's crystal clear. Usually around 9, they're gonna give you a stop hunt. And when you have a stop hunt around 9, you know that everything after 9 is more valid. So stop hunt starts around 8:30, and then around 9 you have ability to see the cluster clear trend. Okay, then you know the trend is this way. Okay, that's why I wait 9 instead of 8:30. Okay,
Yeah, so,
so you understand that.
so
Yeah.
typically, like at that manipulation hour or whatever,
Yeah.
you're gonna enter after everybody's been taken out of the market, but based on like our entry rules or whatever, you're gonna get that entry at that time anyways. I hope that makes sense,
Yes.
guys. Because we're still waiting for everybody to get stop hunted and then returning to our original POI that stop hunted first.
Yes.
So we're waiting for everybody to get out of the market, wipe them out, and then in New York we'll get that retracement back in. So just keep that in mind, guys.
Always wait for a stop hunt.
Yeah.
Stop hunt, it can be a structural stop hunt, it can be a session stop hunt, but you need to wait for a stop hunt. In this case, we got session stop hunt and price goes down, right? You got structural stop hunt and price goes down. Yeah? So wait for a session stop hunt. If you want to make it more powerful, wait for a session stop hunt and a structural stop hunt, like in this case. But if you are really interested in scalping, do not have much patience. If you really want to enter the trade, which sometimes isn't that bad, wait for a session stop hunt first and then look for your entries. Okay? You don't have to wait for a structural stop hunt. The one that is going to give you the high, low, and high, strong high and strong low, sorry. Okay? Structural stop hunt. You can look for your entry. This is London close, by the way. Without these timings, I don't know. I honestly don't know how people trade without these timings.
Right.
These timings are gonna give you how to trade. These timings are showing you what's really happening in the market. I know some people mark the entire London from here to here, but I'm giving you the exact times when it comes to exact hours when the momentum is actually happening. Okay, we're giving you the times when the momentum is actually happening, the hours when when it's actually happening. If you want to enter before New York manipulation, like I said, 12:30 is the perfect time. Somewhere around here is the perfect time to enter. Set up 12:30.
Anybody have any questions?
Yeah. Shoot if you got any.
Yeah, there's no question. Oh, volume. Volume we're going over in another lesson. I don't want to overwhelm everybody today because this is already a lot. Yeah.
All right.
Yeah.
So
we
you're
used-
looking for intraday trades. You need to wait for these timings. You need to wait for, if you don't know where your POI, the future POI is, the high probability POI is going to be the one that has momentum lines in it. These timings have the POIs. These timings are the POIs. These are the momentums. These are where the banks actually started pushing the price down or pushing the price higher. Okay. When it comes to previous weeks high or weeks low, there are also one way to look at a stop hunt. When you see a session, when we see Asia high, Asia low being taken out, when we see Frankfurt's low, Frankfurt's high being taken out, in this case Frankfurt's high and Asia high, and you see a weekly high being taken out, this is a strong, very strong confirmation that the price will reverse. Right now, if you see this in the morning, you can definitely actually just sell it. There is no need for stop loss, just sell it, okay? Because these are very strong confirmations that the price will go the opposite way. There is also a previous day's high and previous low. They are also telling you that the price might go the opposite way once it happens. Once it happens, you can look for reversals, okay? And what I prefer the most is daily opens. When it comes to daily opens, daily opens are really precise. If you're gonna use anything, use daily opens. Daily opens need to be taken out, even by a minimum of 0.1 pips. They need to be taken out. They are targeting daily opens. They are always targeting daily opens. Okay, if you don't know what to target as your take profit, target daily opens. Why did price decided to reverse from here? It was a daily open. Price takes daily opens all the time. From the previous day, or that same day, price will take daily open. It's probably the strongest confirmation I have when I'm trading. That's the strongest confirmation I have for my take profits and my reversals. Daily opens. I will not look for this as my order block. Daily open is right here. I need to wait for daily open to be taken out. I will not look for this, or this as my order block. Daily open has to be taken out so I can look for reversal. Daily open, plus London close. So you got a daily open that gives you reversal after it's been taken out, and then you got a London close that usually gives you the reversal. That's two confirmations. If we ignore everything else, breaker structure and order blocks and whatever, that's two strong confirmations that price will reverse. Okay. Okay. Anybody got any questions about daily opens? Like I said, the strongest thing I ever seen as confirmation is daily opens. Daily open, it's in its own nature is actually a stop hunt. When you see a daily open, you can definitely mark it as a stop hunt. Daily open is a stop hunt.
They're asking for the indicator to that.
Daily open. There's loads of them. You posted it in chat.
I don't really use daily open, but I'll find it.
All right.
Yeah.
I'll send it in the chat. In the chat. You understand that just by looking at like this, you can see how powerful daily open is, right? I hope everybody understands that daily open needs to be taken out so you can look for your reversals. Everything before this is for those people who don't know their take profits or reverse their entries in scalping, but I usually use it for swings. They are amazing take profits for swings, amazing reversal opportunities for swings. If I'm missing this, I'm looking this. Yeah.
Cool.
Loads of examples. Daily open has been taken out. If you were ever wondering what they are doing and why is the price taking out here, it took this with a wick and decided to go up, it was because of the daily open. They start taking daily opens all the time. Sorry. You got Tuesday, I'm pretty sure there is an indicator Tuesday, every week's, every day is open, like Monday's open, Tuesday's open, and so on and so on. But even this one is not that bad, and I prefer to use this one because it doesn't cluster the chart. Daily open taken by few pips, a sign of a reversal. It's always a sign of a reversal. Daily open taken, a sign of a reversal. Okay. Of course, you cannot just trade based on daily open. That would be really silly. I don't know why this is here. But if you have daily opens that haven't been taken out, let's say on this Monday, I know my take profits should definitely be daily open. And I know that after daily open has been taken taken out. If I am inside of New York momentum lines, I will look for reversal.
Somebody asked, do you consider daily open as a candle open or 12 a.m. New York time?
I did as a candle open,
Candle open.
2300, 1 minute candle at 2300 is the one that gives you daily open. I don't know about your time spot, 23, I'm not sure about New York, USA times. But 2300, 1 minute candle, once it opens, its body is showing you the daily open. Once you see a daily open coming into London session 8:30 or 9, if you want to have a better timings, and if that London has taken out Frankfurt's high or Frankfurt's low, in between that also takes daily open, in between that also takes Asia high, you can definitely look for reversals. Those three confirmations just based on timings are really, really powerful, really strong confirmations just based on timings. Without breakout structures, without volume, without anything. The sessions are telling you an amazing story, what's actually happening in the market. Why are they actually reversing from where they are reversing? Yeah. Why did they take Asia high? Why did they take Asia low and so on? Without this, for me, it would be silly to trade as a scalper. Okay. Even for a swing trading, when I look at 4 hours, 1 hour, 30 minutes, I'm still using POIs from momentum lines, from those timings. So even for a swing trading, it helped me a lot. When it comes to previous week and yesterday's low, yesterday's high, another good confirmations if you want to use that just to take a reversal or even continuation based on trend. Okay, so I hope you got everything down. New York, Asia session, second half of Asia session is a fake trend. Frankfurt, his job is basically to do nothing. London is either gonna take Frankfurt high and Frankfurt and Asia's high, or he's gonna take Frankfurt's low and Asia's low. Okay, New York momentum lines are usually gonna be taken out. New York is usually gonna take out London's high or London's low. 17 p.m. at the end of the day, London close will often give you a reversal. Even if the entire day is just ranging, the timings will always be respected. Timings will take each other out. That's its job to do. New York will take London. It's its job to do. If it doesn't take it today, it's gonna take it tomorrow. Yeah, but it has to be taken out. New York takes London here. This is a higher time frame. I don't know if you can see what I'm seeing, but New York takes London. New York takes London's high. 5 minutes. Ignore this times, this week, because it doesn't have the right timing. Yeah.
Cool.
So for me, it would be very, very foolish to take trades without understanding this. These are the timings that will give you exact momentum. If you have breakout structures with it, UMs, if you have whatever, if you know these timings, it will help you a lot when it comes to intraday. You can ping pong it just based on these timings, right? Wait for a stop hunt. Inside of those timings, we need to wait for a stop hunt. Stop hunt, stop hunt. this is your entry opportunities. Everything from here is now valid. Everything from here is now valid. Stop hunt inside of these timings will give you a strong high and a strong low. Stop hunt inside of these timings will give you a valid supply and demand. Okay?
Cool.
London close if you really want to take a reversal. All right.
I think I'm almost out of the memory for this one, so
All right. Sorry for keeping
no, it's
it
all
long.
good. No, I want them to learn. So good stuff. I hope you guys learned a lot.
If you got any questions about sessions or timings, let me know. Have in mind that the Google times or whatever times anybody told you, they are not really true. They are never going to give us the real timings of London Open. They're never going to give us the real times of New York. That would be silly if we knew when the London is going to give us momentum, right?
Right.
Asian real time is actually 11 till 7. Some say 11 to 5. I prefer 11 to 7. Some say 11 to 8. I honestly think it's 11 to 7 and then Frankfurt from 7 to 8. London Open is 8:30. New York Open, which is really important. If you go on your charts today and observe 14:30, my time, Berlin time, I don't know your time, but 14:30 is usually, it's a high probability that New York will spike at 14:30 p.m. I'm giving you the high probabilities here. 17 p.m. London will close and it will give you a reversal. Even if it's 10 pips reversal, it's 10 pips reversal. Even if it doesn't align with the overall trend, higher time frame trend or whatever, it will give you a small reversal. You can still take out, you can still take 10 pips out of the market. If you want to go on a lower seconds time frame, wait for London close at 17 p.m. Wait for London close, take an order block to order block. You will have 5, 10, 15 pips, depending on strength of the trend line. And be careful, by the way, guys, it's not always 8:30 exactly. It's not always 9 to 10:30. It's somewhere around those times. It can be 9:15, it can be 9:45, but somewhere around those timings is where you're gonna look at your chart. When it comes to intraday scalping, I'm not looking for entire day to trade. I'm not looking to trade the whole day. I got those timings that are telling me when the momentum is gonna happen. And only during those times is when I'm gonna look at my charts. There is no need to look at the charts all day. You got the timings set right now. Those 1 hour and a half in the morning, 1 hour and a half in the afternoon is all you have to look for. Okay?
Cool. All right. I will send you guys a recording. This is almost 2.5 hours, so it's gonna take a bit to download and distribute to everybody, but you will get them. Cool.
All right, guys. If you have any questions, post it in Telegram.
Yep. And I'll see you in London.
See you in London.
All right, guys.
See you guys.
Have a good one.
Bye.